So, after we've understood how businesses are categorized into two groups, the service and the trading, we're now going to go back to the incomes and understand more about incomes. As you can see, income is divided as the way we report income in the income statement is reported as two types. One is reported as revenue, and the other is reported as other income. I'd like to go back to that sheet. So income here will be reported in two groups. What are those groups? Revenue and other income. Under revenue, we are looking at the main source of income, which is the income that the business earns from its operations. So that's the main income. For example, if it's a courier business, then the revenue for the courier business would be the courier fees received. If the main operation is a landscaping fees, if it's a landscaping business, then the landscaping fees would be the main source of income. By the way, here we're talking about only service businesses. We will look into the trading businesses later. So for a service business, the income would be reported as revenue, which is the main source of income, and other income. Now the service businesses can also earn income from other sources. For example, they can sell stuff on someone's behalf, for which they will receive the commission. They may have bought a business. Sometimes, especially if it has any surplus cash, it buys shares into other businesses. So if it has done that, then obviously it would be receiving dividend, which would then be reported as other income, because that's not the main income from the main operations. It's on the side income. They may have subletted a part of their shop, a part of their office, for which they receive rent. Again, it's an income which the business is earning, but however, it's not from the main operation, is again from the side. So therefore it is reported under other incomes. So that's the part on income. If you go back, so the income will be reported in two groups, revenue and other income. And then adding up both of them will give us the total income. Now let's have a look at the expenses. Expenses of a service business can be or will be reported under three groups, under three categories. I'm going to start from here. The first category is called the finance costs. Now the finance costs, it only includes those expenses which are related to raising finance. And obviously when you raise finance, you take loans. One of the sources of raising finance is a loan. And when you take a loan, you have to service the debt. And that servicing of the debt is called paying interest. So you got interest on loan, you got interest on overdraft, or you got interest on mortgage. So basically finance costs only includes interest. Now the interest could be on either loan, overdraft, or a mortgage. So it's pretty simple. It's pretty easy to remember. Finance cost only includes interest. Then comes the next category, administration expenses. And as the very name suggests, these are the expenses which are connected directly to the administering of the business, which means you're looking at mainly office expenses or anything to do with administration. For example, the rent that the business pays for its office, the office wages that it pays to its office staff, the insurance that it has, the insurance premium that it pays on different risks that have been covered. The rates, sometimes the business has to pay rates, so that's an administration expense. Telephone and power is another business administration expense. And there'll be more. There'll be more as you learn and you gain confidence. You will learn more expenses will be coming under this category. Now, this is a very special group. As you can see, it's called Group 1. Now, Group 1 is only used for a service business. Why a service business? Because these are the expenses that are connected very specifically with the business, with the nature of the business. So, for instance, if we are reporting expenses of a courier business, then we are looking at expenses like the van repairs, the van expenses, anything to do with running the operations of the courier business. And bear in mind, they have to be expenses. So the expenses of a service business is reported in 3 categories. Group 1, administration expense, and finance costs. Now, usually what happens is, as a matter of practice, Group 1 is reported first, and then administration expense and finance costs, but then there is no hard and fast rule as to the sequence of these 3. You can put them in any order. Preferably, Group 1 should be number 1. So, if you were to go back into what we've done in the past, here it comes. So, income is reported in 2 groups, revenue and other income. Expenses is reported in 3 categories, Group 1, administration expenses, and finance costs. Now, if you were to look into how to prepare, how to start making the income statement of a service business, few things to understand and keep in mind. The first thing, the heading. Now, the heading has 3 elements. What are they? The first piece of information in the heading is the name of the business. The second piece of information in the heading is what is being prepared. And the third piece of information in the heading is for what period of time. So, the format of an income statement would look like this. So the heading would look like this. The name, Jack Plumbers, what is being prepared, an income statement is being prepared. So that's an income statement. For what period of time? For the year ended, whatever it is. Or you could swap the word year with period, for the period ended. But then when you say year ended, it means you're referring to 12 months. Period could be 6 months, 3 months, 2 months. This is the basic format. So you have particulars, one big column, and you've got amount. So I have put this equation in a vertical form. Total income minus total expenses gives us profit. If it's a loss, then we put this figure in brackets. So this is a very basic format. And what we now need to do is, we need to keep that format in mind, which is total income minus total expenses equals profit or loss. Keep that format in our mind to prepare a more in-depth statement. Again, before we start making the income statement, again, some prior knowledge, what we should know before we're making income statement. Of course, we need to know the two categories of group of revenue and other income, and then three categories of expenses: group 1, administration expenses, and finance costs. Once we've done that and we have our format in mind, we now need to look at the trial balance, because that's where all the information would be given to us if we want to prepare the income statement. So we will have the trial balance in front of us. Now, when we have the trial balance in front of us, we need certain skills. The first skill is that we should be able to look into the trial balance and be able to identify expenses from the trial balance. The trial balance will have lots of information. It will have all the assets, it will have all the expenses, and it will have the amount for drawings in the debit balances column. It will also have liabilities, all the incomes, and the equity as the credit balances in the trial balance. So from all those information, all the information available, we should be able to firstly identify expenses. And after we've identified expenses, we should then be able to group those expenses into those three categories: group 1 expenses, administration expenses, and finance costs. I'd like to remind you here again, we are making an income statement for a service business, not a trading business. We will look into the trading businesses later. The second skill that you need to have is be able to identify the incomes in the trial balance. And obviously, these incomes would have a credit balance. So if you have a trial balance, which is in a T form, the debit balances would be on this side and the credit balances would be on this side. One more time, the debit balances would be on this side of the trial balance. If it's a T trial balance, debit side balances would be on this side, and the credit balances would be on the other side. So, looking out on the other side of the trial balance, you should be able to pick up the incomes and then be able to classify them into these two groups: revenue and other incomes. Once in the trial balance you've been able to do these two skills, then you are ready to move ahead.